Good afternoon. Welcome to the Daily Stock Market Update. The DSEX returned to the positive territory today after remaining in the red zone for 2 consecutive trading days, gaining 10.90 points or 0.17% and settling at 6,585 points. Market turnover was BDT 5.30 billion, which is a decrease of 0.61% compared to the previous trading day. Beacon Pharma, Square Pharma, Kohinoor Chemicals and Salvo Chemical from the pharmaceutical sector, Stern, Prime, Pubali and NCC Bank from the banking sector and BSRM Steels from the industrial sector pulled the market up today. In terms of sector-wise return, the pharmaceutical sector registered the highest gain of 0.55%, while the banking sector posted the second highest gain of 0.21%. On the other hand, the life insurance sector posted the highest loss of 0.84%. 4 general insurance companies and 3 banks were among the top 20 gainers today. JMI Hospital Requisite, HR Textile and Beacon Pharmaceuticals registered the highest gain, while Takaful Islami Insurance, IFIC Bank and National Feed Mill were the top losers. Market debutant JMI Hospital Requisite continued to extend its positive streak. HR Textile announced yesterday that it's going to have its board of directors meeting on 31st March, where its third quarter earnings will be disclosed. Thus, investors' high earnings expectation may have caused the stock's price to rise. On the other hand, investors exerted selling pressure on Takaful Islami Insurance's stock, even though its earnings and net operating cash flow per share increased compared to the previous year. Both IFIC Bank and National Feed Mill fell in value today as these companies resumed trading today after their record date. There was no disclosed price-sensitive information for Beacon Pharmaceuticals. The trading volume of JMI Hospital Requisite, Probhati Insurance and First Janata Bank Mutual Fund increased significantly today compared to the average trading volume of the last 3 months. There was no publicly disclosed fundamental reason for the volume increase of the above-mentioned stocks. Today's top 2 news. Lower tax revenue and higher borrowing are responsible for Bangladesh's debt service to revenue ratio jumping up to 81.2% in fiscal year 2021 compared to 56.2% in the pre-pandemic era of 2019. The IMF has cautioned that although debt distress is currently low, such increasing foreign loan repayment amount and debt service to revenue ratio are causes for concern. Local experts are, however, not that concerned at this time as total public debt as a percentage of GDP is still much lower than IMF's threshold of 70% as it currently stands at 41.4%. The current situation is still believed to be within manageable territory and focus should be on productive investments to generate high return. We need to remain vigilant and address the issue of low revenue collection to avoid future shocks. The central bank has prepared a draft on other assets classification and provisioning policy to bring discipline in the banking sector. At present, allocated amounts in multiple segments including business development, advertisements, travel and so on remain unspent on a regular basis at times for years. From now on, any unspent portion of these funds within 6 months to less than 1 year have to be considered as doubtful assets and 50% provisioning is required. And if these funds remain unspent for 1 year or more, those need to be considered as bad debt and require 100% provisioning. That's all for today. We will be back again next week with more updates on Dhaka Stock Exchange. Follow LR Global on Facebook, LinkedIn, Twitter and subscribe to our YouTube channel. Thank you.